Good evening, this is Ken Long from Tortoise Capital, and I want to review some regression line crossover trades today from the chat room on June 25th, 2012 in silver. And I want to start off by establishing the context for this trade, which was based on swing trade opportunity in silver, looking at the rlco regression line crossover lens. And then we'll dial into the day to see how that unfolded during the actual conduct of the trade. This first started off as a swing trade opportunity that I observed. This morning there was a big gap down in the market, but then it went sideways for most of the first 2 hours. And then the volatility ETF also was going sideways, and so nothing was really moving until silver, which was in a sideways quiet channel, started to break out. And so I had already framed this up on a swing trade, and that's what we're looking at right here. Is the 1, 2, 3, 4 a 6-day look back using 30-minute time frame. And we're using the rlco lens, the regression line crossover. So we have the blue river in the middle is a 30-period Bollinger Band with one standard deviation plus or minus. The mean is highlighted in the thick red line, so that's a 30-period simple moving average, of course. Two regression lines. The blue is a 10-period regression line. You can see how well that maps to price. The black line is a 30-period regression line, which kind of front runs the 30-period simple and is much more adaptive. The dashed purple lines represent the the volume weighted average price, the VWAP, and you can see that can be discontinuous. Here's one, then it gaps down and opens flat and stays that way. This orange ribbon is a 2-period Bollinger Band. The little white line that you see in the thick areas, that's actually the price line for that moment, and which gives it a 3D kind of effect. So what we had in silver over the last 6 days was a price at 42, or an AGQ, excuse me, price at 42 that had sold off to 36. Yesterday, it failed to fail further and was locked in a sideways quiet channel the whole day, so we could reasonably hypothesize that 36 was the swing low. It opened right about where it closed. That sideways quiet channel continued, and then it started to break out. Now, it was a little bit higher than yesterday's price, which had actually closed pretty well, and then the breakout occurred here, and we're going to look at an entry about 36.80. We're going to look at two trades in here. We actually took this in 2 legs to net 7R, basically going from the sideways quiet channel breakout in the green circle to this move up in here. That was the end of the second leg, which represented an additional 3R. And then it kind of went sideways and closed pretty strongly for the rest of the day. In my view, there is still a swing trade opportunity in here because I see fair value being up here around 40.50, and if it can just get back up to the 6-day high up here around 42, I really see from 39 to 42 about $3 worth of potential swing trade move. It's still within reason, and then depending on where if you can get a stop in here pretty tight, you can easily see 2 to 1 in there. Also, this is a trade that I was willing to hold pieces of the turbo trade overnight. So intraday, I'm going to be a lot larger than I am in the overnight hold, but I can use, in this case, some of the money that I earned off that 7R trade to fund the overnight position, which I hope will unfold into a swing trade. Now, if tomorrow silver acts well and it's better than the market, then I'll be able to put that turbo position back on intraday with a tight stop and continue to ride that escalator up. So that's the context that we have here. I really see this area around 41 as a pretty strong resistance area. So I'd almost be surprised if it got to 42. So we had a harsh sell-off, and then yesterday was failure to fail further. Sideways quiet channel continued, and then we're going to look at the breakout here at 3680-ish. Now, I'm willing to take this as a swing trade with an entry, and I actually got an entry at 3670. And I was willing to use a 50-cent stop around 3620, so way down in here around the red line, or a little above the red line. And with the turbo trade, however, I'm able to play that with about a 20-cent stop, and that turned out to be a pretty nice trade for us. All right, so the next one I want to look at right now is, this is the actual swing trade that we set up, and I was looking at it in silver. I'm going to execute the turbo trade in agq, but the original position I put on was in silver. So this is regression line crossover, June 25th, 2012 in silver, playing this as a swing trade. So I'm using that 30-minute time frame here. Entry at 2610, really at the top of this sideways quiet channel. It looked like it was starting to break out. It had just crossed the Bollinger Band mean. I saw a 50-cent stop in here. That equates to about $1 stop in agq. And I was looking for initial targets of the top of yesterday's range at about 2670. So it's a 70 cents on the upside, 50 cents on the downside. Really what I'm hoping it'll do is close the gap up here around 2740, and that's where I'm going to get my 2-to-1. So I set that as a swing. As it started to move out pretty quickly, however, I said, you know what, this is really starting to move. I'm going to put a turbo trade on with agq. And this is what that this move in silver is starting to look like. Now we're going to zoom into the 3-minute chart, also using the regression line crossover, and you can see from the open here at 9:30 Central Time, sideways quiet channel all day until the breakout occurs at about 90 minutes into the session, and so I get an entry at 2610, and then get to no lose quickly as this thing just takes off and goes, never looks back. UVXY was another symbol I was stalking. However, it stayed in this sideways quiet channel after a gap up and never really moved at all. So silver became much more attractive because it was actually moving. I wanted to dial in here and show you what the silver breakout from sideways quiet channel looks like on a 1-minute time frame. And here's that same entry at 2610 in this area. So even on the 1 minute, it looks like a sideways quiet channel as well. And with a with a 20-cent stop, that gets to no lose pretty quickly. Now the agq trade is where I executed the turbo, and I got my entry, which would have been the equivalent about 3660. If I'd been trading that straight up, but in the time it took me to shift over to agq, it had moved up to 3680. I was still interested in buying it, so buy that thing at 3682 with a 20-cent stop, gets us down here at 3662, right around this red line. It never looks back. Once it makes this pull back and then breaks out at about 3692, I'm ready to make my go to no lose. This first leg up proceeds pretty orderly fashion till about 3760, 62-ish. As it starts pulling back into this cluster, I decide to go ahead and take it at 3757. So that's 18 cents plus 57, 75 cents on 0.2, which is just about 3.5 R, and that's from 11:21 to about 11:50. So in 30 minutes. Intraday. Now what happens right after I get that exit at 3757, it lerps around here in this congestion area for about 15 minutes, and then takes off and breaks out higher than the current working high at 3762, and so I go ahead and re-enter at 3765, and it takes off for what I'm hoping is going to be a second leg. And with the entry at 3765-ish. That would put us, 20-cent stop would put us just below this congestion zone, which feels pretty good at 3745-ish. It leaves the station and goes straight up to 38. It got as high as about 38.45, pulled back to 38.30, which is where I went ahead and exited this leg. So after a really nice first leg and congestion, and then take off again, and it didn't even get back to the Bollinger Band mean, as you can see, but just took off. So that's about another 3.1R. So we're coming in about 6.5, almost 7R on that combination trade. This shows what happens after the exit. About 5 minutes after my exit, price is sliding down. You get the regression line crossover here in the blue circle, and that's what that one says. Is I take that as a sign that after a really nice move, you need to be exited by this time, which would get you about 38.25 if you had exited here. When we get a regression line crossover outside of the river after a nice move, the immediate target is the Bollinger Band mean. Now, there's not a lot of room to trade that in there unless you were to go short right away. But why would you? You just had 7R on the upside. And so I'm really stalking this as a potential support area for the next leg up. I actually tried that. There wasn't much in it. I think I ended up losing about a half an hour the rest of the day with a little stopping and starting, but never really got an additional follow through. But the point here that I would make is after a regression line crossover, we would expect it to be digesting, and then price finds the Bollinger Band mean. So that's in retrospect what this looks like: a swing trade frame, a harsh sell-off, a day of sideways quiet channel, which I interpret as failure to fail further. It held support north of 36 in AGQ. We get the start of the day with 90 minutes of sideways quiet channel, and then it breaks out. So bang on it with a tight stop, and you luck into two good moves and had a nice re-entry in here, which come in around almost 7R for the day, and that 7R is going to fund an overnight swing position with the idea that this looks like an intermediate low, and so people may want to buy the second day's worth of momentum, and I'm content that if it does that, I can put the turbo back on at some reasonable point of advantage, and then possibly play the trade to 40.50 and then ultimately up to 42. Okay, so that's the regression line crossover, a combination of turbo and swing trading, and just being prepared and knowing your reward to risk, and using a consistent lens of the river and the ribbons and the regression lines. They have the standard meanings regardless of time frame, and it's kind of fractal on how well they drill down and support each other. So that's everything I wanted to cover tonight. This is Ken Long from Tortoise Capital. Keep your risk measured and your powder dry.